Thank you everyone for attending. And today I'm going to go through a PowerPoint presentation on a particular, what we call a Midwest investment market. This is Seewing Yee from the Yee Real Estate Network. And my co-host is Julie. Julie is one of my coaching mentor investor within my network. And she started late in life in terms of real estate investing. But let me tell you, she really, once she got it going a few years ago, there's no stopping her. Julie, I know you are very motivated. You're very dedicated. You have a priority in your life. Real estate is important to you. It'll provide your financial security and you have purchased a total of 6 rental properties in a very short period of time this past 2 years. So I really admire your ambition, your motivation, and your aspiration and what have you. So I invited you to, thank you. I invited you to be on this podcast because I'm going to talk about one of the market, which is, I'll show you the screen right now. And here it is. Now, so before I begin my presentation, Julie, now a real estate investor have a lot of different ways they want to invest in real estate, right? And we just talk about one way today, which the way I've been doing it for 20 years. I've helped hundreds and hundreds of investors over the past 20 years to buy in different markets. But with that said, now, let's say, Julie, if you live in high cost areas such as California or New York City or Pacific Northwest or in Chicago or somewhere in the Northeast, New Jersey and in Boston, or high cost market where in your backyard, you're unable to buy cash flow properties because the housing cost is so high.
Right.
So one have to go out of state, one have to go long distance investing to buy cash flow properties in better markets. Now, Julie, one methodology is a lot of people promote that. A lot of real estate investing organization in a YouTube video, they try to promote out of state properties through doing it yourself. For example, I hate to pick on bigger pockets, right? You and I know who are the bigger pockets are, right?
Correct.
They every day on their podcast on a daily basis over many years, they highlight an investor. Oh, I bought 3 or 4 or 5 properties in Detroit, Michigan, or I bought 6 or 7 properties in Iowa, or I bought 3 or 4 properties, very low cost property, cash flow properties in somewhere in the northeast corner of Arkansas, or whatever, right? I get it. And those kind of information, those investors, they spend time to buy their own properties. They fix the property themselves. They look at the multiple listing service. They make lowball offers. They make 100 offers on a monthly basis. Oftentimes, they get rejected. They do it themselves. They self-manage their properties. They do their own rehab. Only the successful guests on those real estate podcasts and YouTube videos, they get to talk about their success, right? And the people that fail, the people that got burnt doing it themselves, they're not going to appear on a podcast. They go into a corner and hide and never do this again because they got burnt. They're trying to find their own deals. They're trying to do flip and flip on their own. They try to go through buy syndications. They try to find the wrong markets. They try to self-manage their properties and they don't use the power of a turnkey system and they get burnt. But on the one hand, Julie, there are many, in fact, let's go back to the main screen. Over the past 20, 30 years, you and I know that there has been many investors have done very well in the Midwest market.
Oh, absolutely.
Okay? Many, I'm not saying in any real estate investing, people can lose money, right? People can get burnt and then they never do it again. But it's all about what systems, what process, what procedures are you using, okay?
Correct.
To me, to you as well, for busy people like you and I, we have no time to become a full-time real estate investor. Okay, it's too much work. I'm not gonna get my hands dirty and do all, especially when we live in a high-cost market. I live in the San Francisco Bay Area, and you live in Southern California. Very high-cost market, and so at the end of the day, the Midwest market. What I mean by Midwest market, for many years, For example, in Cleveland, Ohio, Indianapolis, Indiana, St. Louis, Missouri, Columbus, Ohio, Detroit, Michigan, and Memphis, Tennessee. All these low-cost, blue-collar, stable cash flow markets. You can buy a very old house for 50 to 100 years old, fix it yourself, rehab the property yourself, and then make it rentable and create a lot of good cash flow, because those properties like $50, $60, $70,000 for a single family home, or a duplex like $100,000, a triplex for $150,000, and a fourplex for $200,000. If you do a good job, the cash flows are very high, and there's nothing wrong with that. A lot of people over the years have become very successful buying in a Midwest market. I'm not. So what I'm saying is, what are you willing to do? Are you going to do all the hard work? Look, Julie, if I live in Memphis, Tennessee, for example, and you live in Indianapolis, Indiana, and you know those local market, I'm not going to tell you not to self-manage your property, because you're right there, right? You can go walk around the neighborhood, find the deal that you want, offer a discount, whatever. You fix the property yourself, right? You're handy, whatever, or you hire a contractor on a local team. You're physically there and self-manage those properties. Nothing wrong with that.
If that's what you can do, if that's your strategy, there's nothing wrong with that. We weren't in a position to do that. So that's why the turnkey really worked well for us.
Absolutely. So let's talk about Buffalo Niagara Falls. Although it's not in a Midwest region per se, way up there in the northeast corner of the U.S., but the market and the housing type and the age of the properties and the numbers and the cash flow are very similar to the so-called generic Midwest cash flow markets. Do you agree, Julie?
I hear what you're saying. I agree with you totally. Yes.
Yeah. But personally, I'm afraid to promote other Midwest market teams because it's too scary out there, right? If you look at MLS, there are so many dilapidated properties in the various cities, in the Midwest. And I'll be scared if I don't have a trusted team in those markets to help me, right?
I think that's important too. With the turnkey, you are getting a trusted team. So it really minimizes the level of risk that you're taking.
Yeah. So therefore, this market team, so it's all about, Julie, you and I know, from buying a long distance, you have to find a trusted team, a turnkey approach, a team in a local market that have a very good track record. They do what's right, and this is no exception. So let's go through this PowerPoint, all right, Julie? Just go through this. We don't want to spend too much time, but let's go there. So there's no such thing as a national real estate market. Our real estate is local. There are more than 400 metropolitan statistical areas. There are more than 3,000 counties. There are more than 9,000 cities over the U.S. If you want to buy cash flow properties with little bit of appreciation, Midwest market could be part of your portfolio, although there are other markets that you and I, Julie, I promote as well in the South and Southeast. And that's how you diversify your portfolio, one's portfolio for long-term wealth building. So anyway, but let's talk about Buffalo. And of course, if you can find a turnkey provider that does all the rehab for you, and they have a property management in place, they have a lender that can do this loan, very low price financing, and not many lenders are willing to do that to finance such a small purchase price. These properties are pre-leased. This turnkey provider in Buffalo been around for more than 30 years. So it gives you a level of comfort. Julie, I don't know whether you have used this particular lender, Ian.
Ian was he was the rep for all four of the properties that we leveraged. He did that, and he has a top-notch team. They are on it, Johnny, on the spot. It's seamless. This is a really top-notch team. I know Wells Fargo's gotten a lot of negative press so far. I've had a lot of success with them.
Yeah. Once again, the value for this loan agent, Wells Fargo aside, he does small investment loans that most other lenders are not willing to do because the profit margin is low. To do a $40,000 loan or $60,000 loan, the profit margin is low. However, Mr. Dornfield, he specialized in this investment loan niche, if you will, because he gets the volume he is getting that will offset his low profit margin per deal, because he he get to do a lot of loans, not only through my investment club, but the other investment club he uses. So that's the first value add you get by investing in this Buffalo Niagara Falls market, because you have a great lender that can finance a loan as low as $40,000.
Right.
This is tremendous value. And some people think, oh, the Midwest market, there's no appreciation. No, that's not true at all. In fact, your properties over the
Yes.
past few years, I know the pandemic has caused a lot of housing markets to increase in value,
Correct.
but quickly, out of your 6 rental properties, did you or did you not, the value of your houses, did it not increase over the past few years?
They have all gone up, which was really amazing to me. But I think that, again, using the turnkey provider, we were able to really buy below market value. If they had sold these properties through the MLS or whatever, I'm sure they could have commanded a much higher price. So that was an advantage right there. We walked in with some built-in equity.
Yep. Yet not only that, your rents have increased
Yes.
a little bit also in the past few years as well. Am I right?
Absolutely. Yes, absolutely. Yeah, we were
Yeah.
actually surprised that they began to make those increases so quickly, but
Yeah.
it just worked out. It's worked out really well for us.
Yep. As you can see, even the Black Knight Home Price Index and the Wall Street Journal has mentioned that Buffalo is one of the fast moving market with the appreciation, as you can see, this past year. And Buffalo Niagara Falls also has been named by U.S. News as a best place to live in the U.S. in 23-24. Isn't that amazing?
Great. That's awesome. Really awesome.
Right here, rated number 27. Who would have thought, right?
That is amazing. Wow. That's very cool.
Now, Julie, on the one hand, some people
That
think
looks familiar.
that could be one of your properties. I don't know.
It is one of my properties. That's awesome. Very
Listen,
cool.
on the surface, when an investor, especially a newbie investor, try to buy out of state or long distance, they look at this picture, they just say, "Oh no, stay away!" Because no, you can't. You cannot judge a book by its cover.
Absolutely.
Look at the interior. I have to believe, Julie, that each of the 6 rental properties you purchased a few years ago in this area, Buffalo Niagara Falls, when you go over the inspection report, do you see something like this, similar to this?
Oh, absolutely. Yes. Yes. We've got a great inspector that we work with. And I think that's important that people understand that too. You're not just buying these properties blind. You are having someone go through it. We have a great home inspector that works for us. And he points out from top to bottom anything that should be a concern, a safety concern or whatever. And then at that point, we will go back and renegotiate with the turnkey provider. And they've always been willing to fix everything that we've asked for. And nothing's been major. We haven't had to replace a roof or anything expensive like that. But yeah, they'll work on those issues. And we've had real good success. In fact, that particular property has a traveling nurse in there. The traveling nurses are great because they're at work most of the time. They keep the places really neat and they pay. They get paid really well, so they pay the rent on time. So that one has been very good for us.
Yeah, very good. As a matter of fact, traveling nurse is one of the, we're not going to talk about it in this episode, but the midterm rentals, which I've been looking into, medium-term rental, more than 1 month, less than a year, midterm rentals, a lot of people, a lot of investors are targeting traveling. And so we'll talk about it in some other episode, but that's a medium-term, midterm rentals is an up-and-coming real estate asset class, which I will talk about it in a foreseeable future because if you furnish your rentals, if you can target the midterm rental space, and traveling nurses and the medical professionals are one of the target, you can increase your rent more than 50% from the long-term leases that you get with the long-term rental. So something to think about. All right. In fact, let's talk about a little bit about some people thinking, oh, I'm not going to buy in the Midwest. The property is 100 years old. All the breakdowns, you have all kind of maintenance costs. You have more vacancies. You have low quality tenants. They can destroy your house. How are you going to overcome? Julie, tell me your own experience, whether this perception is true or not true. Share your own experience.
That's interesting. And I think that is a concern for a lot of people. Now, we live in a city down here in Southern California where old is very fashionable. It's very popular. Older homes tend to go for more than the newer homes. And structurally, older homes tend to be built better. I'll just keep it real. They tend to be built better. So the thing that anybody that has a concern about the older homes, just understand they've been standing for a lot of years for a reason. So that's think about it from that perspective. Old and that would go for anything, even appliances these days. Old appliances last much longer than new appliances. New appliances have about a 7-year value on them and then they're done. So there's nothing wrong with buying an older home. Now, like I said, we have a home inspector go through it from top to bottom when we are in negotiations with the property, and they will go through and point everything out that should be a concern for us. And so at that point, we have an opportunity to renegotiate the transaction. We can even get out of the transaction if we wanted to. And I think that's what people worry about. What if it needs a water heater and I get stuck with the bill or whatever? No, you go back and you renegotiate it with it. You renegotiate with them. So that was what we were able to do with all 6 of our properties. And at this point, we haven't had any major thing go wrong with any of our properties. It's only been about 2.5, actually 2 years, because we bought our first one in July of 2021. So it's just been 2 years that we've had the longest one, but we haven't had any major issues with any of the properties. So it's been a great experience for us.
Yep. Good to know. I know this is a small sample size, but yeah, we're here to dispel any misconceptions out there. But as long as you hook up with a reputable turnkey provider in a specific market, they are very transparent. They can do a good job for you. And our turnkey provider in Buffalo Niagara Falls has been doing it for 30 years. So that gives me the level of confidence, that give you the level of confidence that you can do this. That'll minimize a lot of risk. Okay, let's go on. And finally, with the remaining a couple of minutes we have, let's go through the pro forma, the cash flow analysis. And I know, let's talk about the 1% rule. 1% rule, for the most part, has disappeared in many of the other markets in the U.S., especially in the past few years, when the skyrocketing housing prices has occurred all over the U.S., and then the rent have not caught up. The rental rate increases have not caught up. So therefore, cash flow is really have disappeared in many markets. But in certain Midwest markets, such as Buffalo Niagara Falls, we are still able to get the 1% rule. As you can see in this case, this is a sample property we have quite often on a weekly basis with the inventory listing here in Buffalo Niagara Falls with our turnkey provider. This is an off-market property, by the way. It's not on a multiple listing service. Just so you know, you got to be a part of a particular network like our network in order to have access to this type of rehab, very well turnkey properties or rehab with the rent to value ratio of exceeding 1%, meaning you can buy a very good working class neighborhood with a C+ class asset class, single family home. In this example, $67,000. You put 25% down payment, even at a 7% mortgage rate, you can still cash flow a couple $100, right?
That's a great property. That is a great property. If it hasn't sold, I'm sure it will sell quickly because the price is right. I'm looking at the cash flow number, the mortgage payments. I'd pay that. Actually, I'd pay more for my cell phone bill than the mortgage payment is on this particular property.
Yeah.
I think people have to realize, yes, there are properties around this country that are less than 100,000, which is amazing to me that you can get it. You can see just even by the picture, it's a decent neighborhood, maybe a B- neighborhood, maybe a C+, but it's a very marketable property. I'm sure you will have no problem keeping a tenant in there. It looks like it's very well structured on the outside. I've actually seen the inside pictures on that property, so that's an excellent property.
Yeah. Not just that, right? The other off-market listings we get from this turnkey provider in Buffalo. Where else in the country we can get a fourplex? Fourplex for $173,000, right? This is a past transaction that occurred maybe a few months ago. I'm not sure, right? Even with a 7.3% 30-year fixed rate mortgage, by the way, you need to date the interest rate, but marry the house.
That's it.
That means when the mortgage rate comes down in the future, you can always refinance.
And look at the cash flow. It's huge.
Yes.
Huge for a fourplex. That's a
Yeah.
great deal too. I actually looked at that one too when they first acquired it and they were just working on it. But
Yeah.
that's a valuable property. That's a really great asset.
Yeah. I know all these turnkey rent ready to go, tenant in place,
Mhm.
all fixed up the best way possible. And you finance a property, you leverage this purchase. Where else in the world, in a country, you can find a fourplex for less than 200 grand and have a net cash flow of $827,
Right.
rental value ratio 1.3%, capital cap rate of 11.9%, cash on cash return of 20%.
Amazing.
And yeah, this is truly a value that you don't get anywhere else. And you can refinance in the future from a 7.3 to a 6%, for example. And guess what's going to happen to this monthly net cash flow currently of 827? You could increase a couple of $100 more.
Absolutely. Absolutely.
Yeah.
Yeah,
This is,
that's a great property.
yeah. Like I said, date the rate, marry the rental house. A lot of our investors, by the way, they not only they do financing, which is 20 grand out of pocket on a finance purchase on the $67,000 property, and such a way to leverage your money with so little down payment. You can get some great income property benefits. And a lot of investors not only do financing, they also buy all cash, and they also buy using their self-directed IRA, which you have done several
We
times
did that
also.
with 2 of our properties. We bought within our self-directed IRA.
Okay, I think, well, as we conclude this video presentation, I think my takeaway is that the national real estate headlines is always doom and gloom, always very negative and out there. But as a real estate investor, there's never a wrong time to buy, because I use the term dollar cost averaging. This means doesn't matter what is the housing cycle. If you can find a cash flow property in a good market, you surround yourself with a good team, you invest for the long term, you delegate and have the property management do all the work for you. It's just, in this Buffalo market, if you can buy several of these, 3, 4, 5, or even more, such as yourself, with you in 3 to 5 years, you could have $4,000 to $5,000 of passive income, net passive income, to supplement your retirement. And so
that's huge. That's huge. And that never goes away unless you sell the property. That never goes away. It can only increase because they're going to continue to increase the rents. So it's even better that I used to sell investments. And one of the things that we would sell a lot of older people is an annuity, because the annuity will pay you through the rest of your life, but it's always going to be the same amount. It's not going to go up. And see, the problem with even with an annuity, if you're getting whatever you're getting, $1,000 a month or whatever, the problem is cost of living is still going up. And eventually that $1,000 is going to be worth a lot less. Whereas with the property, cost of living goes up, rental increases will go up as well. So it's a win in terms of what we're doing.
Absolutely, Julie. So here's my final recap. People listening to this presentation, so please and subscribe to my YouTube channel. And also, if you have not already done so, if you receive value, also put your email at the bottom of my video so you can become a free member subscriber with our investment network, so you can learn a lot about real estate investing, so you can create wealth for yourself. All right. So with that said, any last word for the audience?
I would just really encourage people to sign up for your network to get your free newsletter, because one thing that you started doing, or you have been doing, is you've been doing these monthly, or actually you do it about every 2 weeks, these mastermind meetings. And these are great. It's great information. We're learning a lot from you. We're learning a lot from the other investors. We're learning from each other. And what I realize in this business, as in any other business, you have to have, it's important who you surround yourself with, because a lot of people have the gloom and doom. If you listen to the news, or even you listen to your best friend, see, they're not going to give you good advice because they can't see it for themselves. They can't see it for you either. So it's important who you surround yourself with. I realized that even just recently, I was with a group of friends and they're like, oh no, you should have never done that with your retirement. Okay, but that's what I have to say. Don't criticize the cuisine before you try it. Because anybody that knows me knows I do my research. So the first thing, investing in an IRA, a self-directed IRA, is not a new concept. It wasn't something that developed 2 years ago, or pre-COVID or post-COVID. It's something that's been around for a long time, and a lot of people have been doing it. And that's why I think it's important who you surround yourself with. Because your friends and your family and their naysayers, and like I said, they can't see it for themselves, so they can't see it for you. So I think
Yep.
it's important. What you're doing every other week with this mastermind group is really important. And it's free.
Yep.
Free is good.
Very well said, Julie. Thank you for your testimonial, if you will, and thank you so much for your time and a great presentation. Thank you for sharing.
Thank you
Uh,
for having me.
all right, with that said, this is Seewing Yee. Thank you for watching. I'll see you on the next video. Have a nice day.
Okay. Thank you. Have a nice day.
Bye
Thank you.
bye.